Hey everyone, welcome back to Corporate Decoder. Today we're diving into a fresh 8K filing, the kind of report companies drop when something important happens. Think of it as corporate gossip, but with numbers and legal jargon. Stick around, because this one involves a company's big debut on the stock market and what happens after the party. Before we get started, if you think that understanding the inner workings of corporations is important, consider subscribing. We also have a Discord community in the description below. Come by and say hi. This is an 8K filing from Slide Insurance Holdings, and the date of the report is June 2025. It's basically a snapshot of important events happening at the company on that day. Slide Insurance Holdings is the company we're looking at today, and they are registered in Delaware. Their stock is traded on the Nasdaq Stock Exchange with the ticker symbol SLDE. The main event here is that Slide Insurance Holdings completed their initial public offering, or IPO, on June 20, 2025. An IPO is when a company first offers shares of its stock to the public, allowing anyone to invest in it. They sold 24 million shares of their common stock at a price of $17 per share. This was made up of about 16.7 million shares sold by the company itself, and another 7.3 million shares already held by some existing stockholders, who also decided to sell some in the IPO. The company made about $283.3 million before paying for the costs of the IPO, like fees for the underwriters, also known as the banks that help sell the shares. The company didn't receive any money from the shares the existing stockholders sold. That money went to those stockholders. As part of the IPO, Slide Insurance Holdings entered into a few important agreements. First, there's a registration rights agreement. Basically, this agreement gives certain stockholders the right to register their shares with the Securities and Exchange Commission, or SEC, so they can sell them in the future. This is often included to give early investors a way to eventually cash out their investment. Second, there's a stockholders agreement. This spells out the rights and responsibilities of the major stockholders and how they'll work together or not when it comes to things like voting and selling their shares. This agreement is something that's pretty standard when a company has an IPO. The IPO and the agreements that came with it change the rights of the company's stockholders. In simple terms, the existing stockholders have to share the pie with the new public investors. Right after the IPO, Slide Insurance Holdings added 2 new independent directors to their board, Andrew Wright and Beth Bruce. Independent directors are important because they don't work for the company directly, so they can offer unbiased advice and oversight. These new directors were also appointed to important committees like the Audit Committee, which oversees the company's finances, and the Compensation Committee, which decides how much to pay the executives. Wright is the head of the Compensation Committee. If you are interested in knowing more about them, the company has provided background information on Wright and Bruce in their IPO registration statement. Slide Insurance Holdings also updated their corporate rulebook. They filed an amended and restated certificate of incorporation with the state of Delaware, basically their birth certificate as a company, and their amended and restated bylaws, which are the internal rules for how the company operates. These changes were approved by the board and existing stockholders before the IPO. The details of these changes are described in the company's prospectus, which is basically a sales document for the IPO. The actual legal documents, the certificate of incorporation, and the bylaws are included as exhibits to this report. And that's it. All the exhibits and legal documents are included here in this report TA. Now let's step back and look at the bigger picture. Slide Insurance Holdings just went public. That's a huge step for any company. It gives them access to a lot more money, which they can use to grow their business, invest in new technologies, or pay off debt. But it also means they're under a lot more scrutiny. They have to report their financial results every quarter, and they have to answer to a lot more stockholders. The success of Slide Insurance Holdings will depend on a few key things. First, they'll need to manage their growth effectively. They have all this new money, but they need to make sure they spend it wisely. Second, they'll need to compete effectively in the insurance market. The insurance industry is very competitive, so they need to find a way to stand out. Third, they'll need to keep their stockholders happy. That means delivering good financial results and being transparent about their business. One thing that stands out is the addition of the 2 independent directors. Bringing in outsiders can often shake things up, but also inject fresh perspectives. Slide hopes Wright and Bruce will help guide the company as it navigates the public markets. Their expertise in finance and corporate governance could be invaluable as Slide aims to build trust with investors. Overall, this 8K filing tells the story of a company at a turning point. Slide Insurance Holdings has taken a big leap by going public, and now they face the challenges and opportunities that come with being a publicly traded company. How they handle these challenges and opportunities will determine their long-term success. Alright, that's our breakdown of Slide Insurance Holdings' latest filing. What's your take on these moves and what they signal for the company's future in the insurance world? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching and see you next time.